Hi there, Addy here from TorontoIndianOnline.com, here with an amazing new property. This is a great property because the property needs renovation. So a lot of times when I talk to clients, they ask me, well, looking at the numbers that the properties generate, how do you make money? How do you make sure that the property that you're purchasing is going to be profitable? So there's two ways of looking at it. One is you buy a property in an area where there's a lot of high demand. So in the future, the rents are going to keep on going up and it will increase the value of your property. Or the other thing you can do is you can buy a property that needs help. So it needs to be renovated from top to bottom. And once you renovate those properties, so if the property is occupied, you renovate them one by one. Or if the property is vacant, you renovate the whole property at the same time and generate additional rent. So based on your purchase price plus your renovation cost, there's a big gap that it actually creates for you. And those are the best types of investments. I personally, whenever I'm investing, those are the type of properties that I'm looking for. So this is that type of property. The property is currently sitting vacant, has 7 units. It's in a really, really good area where the rents are going to be really, really amazing. So let's take a look into it and then we'll talk further about it. So it's a 7-unit building. It's located in Bloor West Village. So if you don't know where Bloor West Village is, this is area that is west of High Park. High Park is Parkside and Keele and Bloor Street going all the way south to Queensway. So this is on the west side of it. So this is area close to Bobby Point. So that whole area, this is Bloor West Village. It's got 7 units in it, 5,100 square feet of above floor space. They're asking 1.398, so 1.4 million, and initial cash investment required is 581,000, and I'll give you a breakdown of this one. So over here, if you notice, it says cap rate of 8.7%, and the reason it's so high over here, it's because there's money that you have to invest. But I'll show you what the future value is going to be based on the net operating income that this property is going to generate, which is $121,000 a year. The property is going to be worth around $2.4 million once all the renovations are completed. And how are you going to do that? I'll talk a little bit more about it too. If you were to just invest this $581,000, the property will generate $54,000 a year. So this is cash that you're actually going to start getting back. So this is why this property makes so much sense. So it's 5,100 square feet above ground, 83 per 197 lots, 7 units, electric baseboard heating. Now, because you're renovating the unit, what I would recommend is actually putting forced air units in there and even put additional gas meters so you can actually charge your tenants for all of the hydro, all of the heating. So you just charge it back to them. So that way your overall cost for running that building is much lower. It's a 2-story raised bungalow with a brick exterior. Now the address is not correct, but it's in this vicinity over here. So let's look at the analysis of purchase. So purchase price is 1.4. Your first mortgage based on 80% is going to be 1,118,400. Down payment requirement 279,000. Your closing cost is going to be 51,620. Now I put initial improvements of 250,000. Now that's based on $30,000 per unit. So that's seven times 30. So that's $210,000, and I have an additional $40,000 in there for any other work that has to be done, i.e. you have to redo the roof, or if you are going to, for example, go and add additional furnaces and stuff like that, then that would be additional cost that you have. But don't forget, based on the purchase price over here and what your future value is going to be, there's $1 million in there. So if you can make the property better and find ways where you can reduce your overall cost for running the operating cost for running the building, the more the property becomes valuable. So instead of being a 5% cap, you could go back and market it at 4% or 4.5% and generate more cash from there. So so cost per unit is around 199,000. Again, once you spend 30,000 or 35,000 per unit, your number goes up, but that's still far below what the market is willing to pay. In Toronto, or in this particular area, you'd be looking around 400,000 per unit. So the numbers actually make a lot of sense. Average monthly rent is around $1,700 per unit. So loan to cost ratio 80%, your loan amount, and I have the interest payment at interest rate at 3.5%, and your mortgage works out to $5,583. So gross rent is $11,900 per month. Vacancy loss, laundry about $150. Operating income that you have is $11,812. Your taxes are $14,143. Insurance is at $2,266. Hydro $2,400. This would be for your common areas. Water, waste, because this is all city and the water is with the city, is around $900. I would say 900 is a little bit on the low end. You might be around $1,200 over here. And then the water tank rentals are $410. So your operating expense is $20,000. So net operating income for this property works out to $121,000. So that's $141,744 minus the $20,000 over here. You have $121,000 minus your mortgage payments of $67,000. Now the $67,000 is also has a buffer in it. It's at 3.5% mortgage that we have done, but we know that we can get right now mortgages for less than 3%. So there's potential for an increased cash flow over here too. So the property would generate a cash flow of $54,618. So debt coverage ratio 14.2%. Again, this number would go down if you have, let's say, the hydro and the utilities, everything being passed on to the tenant. So that's something to keep in mind as well. So further breakdown, I can provide you with this. This would be available. It's available just below the below my video on my website. There's floor plans that I have available. If you're interested, I can send them over to you. 525 square feet for the 1 bedrooms, and it's $1,650 per month, which is very easy to get in that area. The 2 bedroom is 775 square feet. I have it at $2,000, but you can easily get $2,300 for this unit. Total units are 7, and then 5,100 total square footage, and 11,900 per month it would be generating. Now, the closing cost that you have legal is around $3,000. Land transfer tax $24,435. $500 for an inspection report if your mortgage company wants to have an inspection report completed, and then you have the dreaded Toronto land transfer tax, which is $23,685. So total closing costs work out to $51,620. Now in terms of your rent, we already went through the rent. So I'm going to be showing this property this weekend. If you have any questions or if you want to come in and take a look at this property, 1-877-439-2339 or Addy at heyaddy.com. Get in touch with me right away. This property will not last. They're going to be doing offer presentation on this particular unit, on this particular building next week. So at your earliest convenience, send me an email. Let me know that you're interested. I'm going to be showing it this weekend. Again, 877-439-2339 or Addy at heyaddy.com. Take care, and we will talk soon. Bye-bye.